Hey guys, this is Cat's Me Out. I'm going to try a different format here where I honestly just tell you my play within the first minute, and if you want to stick around to learn something about technical analysis, you can go ahead and watch the rest of the video. So this week I'm feeling pretty bullish, although I think there's going to be a capitulation coming up, so there is reason to be careful. My position is probably going to be a 280 call with a convex tail hedge, which is basically a deep out of the money put. Just in case there's some black swan event I couldn't possibly see coming. A lot of hedge funds have been using this strategy in this market and been very successful, so I've adopted it in my trading strategy also. So yeah, 280 call, be careful. There is almost certainly going to be a capitulation soon, so use a stop loss as always. Do your initial stop at let's say the end of the average true range. And then once the position is profitable, move your stop up with it to just lock in profits. All right, so as always with my TA, we're going to be starting with the news. We're at Yahoo Finance, as always. The most significant news I can find is that the OPEC deal actually went through, the OPEC Plus deal. Russia and Saudi Arabia have agreed to oil production cuts. It looks like, let's see, they have agreed to cut oil production by 9.7 million barrels per day, which is obviously going to drive the price of oil up. I would expect a short-term rally from oil ETFs and oil companies this year. So tickers like USO, Chevron, XOM, those types of things, we're going to see gains in. That might drive SPY, but I honestly think the current market conditions for SPY and the waves of pure panic and greed kind of blossoming within the market are really too much for any single news event to really change the levels we can expect and the movements we can expect from SPY significantly. If you've been trading the last couple weeks, you've obviously seen the market continue to rally on terrible news and crash on good news. So we can see that the movements in the last couple weeks have far more to do with just waves of greed and panic than they do with actual specific news events. Now, if we look at futures opened down about 1.25%. In the last couple weeks, futures have not really been a reliable indicator for what's going to happen in the stock market. So I wouldn't pay too much attention to futures unless they are limit down or limit up. If you watch the Kramer video I posted, you can hear him talk about how in these low volume price levels, futures are kind of like the front line for manipulation for a lot of hedge funds. So, I mean, they could know that this OPEC deal is going to end up rallying the market quite a bit. In addition to, we're already going through a significant wave of greed here where people are buying in. So there's market action with the futures could really just be an attempt by hedge funds to depress the market at open so they can buy into a rally at a cheaper price. Pay very little attention to futures unless they're limit up or limit down. It's kind of meaningless at this point. So let's get into the meat and bones technical analysis. As always, we're starting off on longer intervals and working our way down to probably 1 hour. Now, if we look at the weekly, the KDJ is still significantly oversold. So there's a lot of gas in the tank for this upward movement to continue. The MACD has just started converging. It's still bearish, but it is converging upward. So you can see on the weekly there are preliminary signs for reversal here. The net volume is also 730 million right now, which means that there's a significant amount of people buying at the ask right now. A lot of people are looking to get into the market. Now, if we go into the daily, it kind of confirms the potential reversal we were looking at on the weekly. Although within a reversal, there's always downward movements too. There's always capitulation. So when we look at the daily, we can see that you clearly have a bullish MACD right now. It seems to be increasing in divergence also, so there is some steam left on this rally. The KDJ has trended into significantly overbought though. So within this rally, I would expect some capitulation to happen early on in this week. That's normally what happens. The market has to trend and give people an entry. So we'll trend from maybe significantly overbought to somewhere in like the 50s, maybe 35 if we're lucky, and people will take that as an entry to buy in. Net volume has also been overwhelmingly positive for the last few days. Somewhere around 190 million, but this has been a very low volume price level we've been at, so there hasn't been a lot of significant resistance for the market to work through. Now, if we look at the accumulated volume resistances, and I've just found from trading in the last couple of weeks, I've removed a lot of supports and resistances here. I've essentially just left the channel support and a couple accumulated volume resistances, and I've been using the VPVR to kind of model where the market might capitulate. And with accumulated volume, we can see there's some pretty significant resistance around 284 to 290. We haven't seen those tested quite yet. I do have a feeling that they will be tested this week though. Now, when we look at the 1 hour, we see that the KDJ is overbought. Not significantly. The K and D lines are both somewhere around 78. They are diverging slightly downwards. So I would expect some sort of opening downtrend to play out on Monday. The MACD has also generally been flattening off. So the rally, at least in the short term, has lost a little bit of momentum. What I would expect is for some capitulation to give people some entries, and then it'll probably pick up a little bit more momentum. Net volume is negative 21 million, which isn't significantly bearish or bullish. Now, a step I am also adding to my technical analysis, since I just recently subscribed to Flow Algo, which measures unusual or tracks unusual option activity. We're going to go over to Flow Algo and look for significant levels in which there was a lot of institutional investment. So we're going to go to Flow Algo, go to equity levels, take a look for SPY, in which we saw a lot of institutional investment. So a 297 is huge level for institutional investment. That would be strength 100. The Flow Algo grades all these levels from 0 to 100. 297.89 saw the most significant institutional investment in SPY's history. So as a rule, in technical analysis, former supports become future resistances. We may see the upper 290 level has a significant take profit point for institutions. So we're going to go ahead and put that on our Webull chart. And we're going to mark it as red, so we know that there's something, or at least I can remember during the trading week, that there was some significant institutional interest at this level. Now, going through the rest of the trading data, because this 297.38 is so close to the 297.97.89, I'm going to leave it out because I already take profit or look for entries within about 0.5% of my exact support level anyway, so it's not really important. I would be taking profit on my positions around 295 anyway, so it's not really important to me that there's another level of institutional support, only about 60 cents away from this one. The other levels of significant institutional support I see here are 257.66 and 243.90. So I'm going to go ahead and keep those in my back pocket because I think there will be a significant capitulation before we see the end of this bear market. So those could serve as important entries in the future for me. Now we're going to go ahead and look at dark pool prints on Flow Algo to see what institutional money might be doing at this particular price level. So when we look at unusual option orders, as in option orders that are of a significant enough size to really be flagged on flow algo, we can see it's pretty neutral. It's neutral bearish right now. So our put to call ratio was 1.628. Put flow was about 62%. Call flow was about 38%. So you can see a lot of institutions are looking to buy insurance right now. They're not significantly swinging one way or the other. We can see on the dark pool prints on this side, everything that's highlighted is considered a dark pool print. We can see still there's a lot of bullish dark pool prints coming through. We'll see if that changes on Monday. These will just be the dark pool prints as of April 9th. So our flow algo information here is still slightly bullish. There is reason to be careful here. I think institutional money is expecting some capitulation. Same thing I'm expecting. So let's swap over to TradingView and look at our volume profile. I did some Elliott Wave Zero. I'm by no means an expert on Elliott Waves, so take these with a grain of salt. Really what's important here is going to be the Fibonacci levels and the volume profile. Now, when you have these irrational rallies like this, Fibonacci levels can be a great way to start your analysis and try to get an idea of what price levels are going to be important. But Fibonacci is very interpretive, as I've said in my support and resistance videos in the past. So for Fibonacci to really be useful and predictive, you have to match Fibonacci levels up with accumulated volume. And that will kind of tilt the analysis in your favor. I think you will be right enough of the time to be profitable. Now, with technical analysis, as I've often said, it's like predicting the weather. You can't be right 100% of the time. The trick to being a successful trader is position sizing correctly and being right more than you're wrong. So when we look at the Fibonacci levels over this last gigantic market movement, and we match that with our volume profile on the right of the graph here, we can see that we've largely moved through this because there isn't a ton of volume in this area. And we are slowly working our way through 280, but right after the 280 price level, around 285, there is an absolute wall of volume that just increases. So when I did my Elliott waves here, I kind of used this volume profile as well as the Fibonacci levels to come up with levels that I thought would be significant pivot points. So right now I am expecting a capitulation. It's going to happen somewhere between 285 and 295. I think there's going to have to be a temporary reversal. All right, so that's it for this week. Feeling slightly bullish. I'm going to do a 280 call, as I said before, with my convex tail hedge. My hedge ratio is probably going to be about 1 to 20. So every $1 I put into puts, I'm going to put $20 into calls. And then around 285 and upwards, I'm going to be tightening my stop loss quite a bit. That wall of volume definitely concerns me. And I've never seen a recovery that was just 100% rally all through. There's usually capitulation, and it's usually significant. I think it's still definitely possible we retest supports at 257 and 243. The institutional investors will be looking to take profit over 280 somewhere. There's no way to tell for sure. We can only guess based on what they've done in the past. And what they've done in the past is look for places to take profit around 297. I would expect to see that again, or even closer in the 285 range, where there's been very high volume in the past. I think a lot of people are going to be looking to sell off and look for new entries around 257 once panic hits people all over again and the sell-offs begin. So yeah, around above 285, tighten your stops for sure, but this is definitely, I think, going to be bullish early week. Monday we might see some minor capitulation just because there's a lot of downward pressure on the 1 hour interval, but after that the weekly and the daily still definitely have gas to continue this uptrend. If you want to use the same charts I do, I use Webull. It's my broker and what I use for charting. It's great. There's a referral link in the description down below. Also, I've put my referral code for Flow Algo. If you like Flow Algo, I think flow algo is honestly a game changer to really get an idea for what the institutions are doing, and be able to see a live feed of unusual option orders. Definitely can be a leading indicator, giving you insight into what big and smart and institutional money is doing is great. I will have my affiliate link down below that I think should save you a little bit of money on a subscription to that. Or you can just watch my videos too, I don't mind. So thanks for watching. I'll see you next week. This week I should have my risk to reward and position sizing video up. So make sure to like and subscribe, and you'll get a notification for that.